pick a stock of the day, a stock that's in the news, one for not great reasons. Thought we'd take a look at Star Entertainment. The casino operator dropped 5% at the open this morning and was among the worst performers on the ASX 200. An exodus of high rollers tipped Star Entertainment to a $6.8 million loss in the third quarter as it braces for the outcome of a second public inquiry into its Sydney operation. There's the old saying that casinos are a license to print money. Well, not at Star at the moment, it seems. Shares are currently sitting at 48 cents. All right, David Lane, you can't get a more battered stock than this one on the market. If you're a vulture investor, an investor that looks for companies that are down on its knees and have the potential to rebound, would this be on your list?
Well, I would have definitely think so. Yeah, you as you said, you can't really get a company that's got as much bad news going on. We've had a lot of bad news over the last couple of years, both in New South Wales and Queensland. Their casino licenses are under question, and as you said, they've got that inquiry starting today. Results from that will probably be out on around the 31st of July, so it's an ongoing inquiry. We've seen two management shake-ups over the last few years. We've seen Robbie Cook, the CEO, and the CFO and a number of other important executives leave recently. And you've also got extended costs as far as the Queen's Wharf development are concerned. So in their announcement on Friday, they did note that the Queen's Wharf is on track for opening in August 2024. Well, that's good that it's on track, but it's actually about 12 months behind where it was, where it should have actually already been open. So yes, you're right. The company has had so much bad news, but as you said, for vulture investors, currently trading at 48.5 cents, we've got a fair value on it of about 90 cents.
Wow, double.
Yeah. It is a good business. You've got the casino in Sydney, the casino at the Gold Coast, the current one at Treasury in Brisbane, and the Queen's Wharf development is going to be a massive development, $2.6 billion that is being spent on it. And when it opens, that will transform the northern end of the Brisbane CBD. There'll be a lot of restaurants, nightclubs, as well as the gaming part of the casino. So that will be a major development. And for those looking for a long-term investment, albeit very, very, very risky, but a long-term investment that could well, based on our fair value, could well double or even go higher, it might be worthwhile putting in the bottom drawer.
Okay, so the extreme risk is that this inquiry takes their casino license away from them, isn't it? So
that's right.
It's like a bit like a biotech, isn't it? They're waiting for FDA approval. As a comparison, it is a hard decision one way or another, isn't it?
Oh, it is definitely, and and to use the casino terms, you're almost betting on red or black, because the potential outcome is that they decide that Star isn't fit to have their license and that they do have to close the Sydney operation. But if that isn't the case, it is a business that continues to generate a lot of revenue. Now, revenues were down. And
so it's only their Sydney license that's up for investigation. Queensland is clear.
In this inquiry?
Right.
Well, in this inquiry. So in Queensland, they've also got a separate finding where their license is being operated under a manager. So not as severe as in New South Wales, but yeah, there have been some question marks and some significant fines in Queensland as well.
All right. So what have you got? A high risk buy, have you?
Well, we've officially got a hold on it, but as I said, our target price or fair value is 90 cents. So I think for those willing to to take the risk, you could well buy
Okay.
it now and hope for a better outcome in the future.
Kai, is it worth taking the risk?
Well, you know the old saying, you got to know when to hold them and when to fold them.
Oh, I like it.
I think it's a fold for me because
It's a fold.
It's a fold.
Right,
you know?
sell.
Yeah, sell because there's just better opportunities out there, and I get the argument that with net tangible assets valued at about 80 cents, there is some upside to that, but the risk that's in there. They've basically had an inquiry in 2022. The commissioner is worried that basically they haven't implemented any of these changes, and if the inquiry goes through, they will lose a license.
Yeah.
It's not a risk that for us we're willing to take.
Yeah. It is pretty damning, isn't it, to say, well, we told you how to get out of trouble in 2022, and you haven't implemented any of it. And as a shareholder, you'd be scratching your head thinking, why hasn't management put this into place?
Yeah, absolutely. I think, the question maybe comes to how deep, like in terms of money laundering and the culture there as well, to see that as acceptable. Maybe it's entrenched in management. I don't know. But it's a good question.
Yeah, okay.